Okay guys, it's Monday the 8th of October. So, first trade of the week. I have been triggered into a long position on the FTSE 100 5-minute time frame. I've actually been in the trade for around about 10 minutes. I was eating some breakfast when the trade triggered. I've never eaten so fast in my life so I could get the video started. So as always, what I will do with the live trade is I will sort of talk you through the analysis of the trade. I'll explain to you what I'm looking for whilst I'm in the trade, and any trade management that I am considering. I'll talk you through the how, the what, and the why. So the FTSE last week made a very strong bearish movement. I was basically looking for it to start breaking down or potentially break down below fairly key levels and then make a move down to around about the sort of 400 level, the 7400 area, which is all the way back up here. Now the market continued all the way down to 7282 on Friday. Now coming into this week, I sort of flipped around what I was looking for. So last week I was looking for those bearish movements. However, coming into this week, we are potentially testing at some pretty nice support levels. So I'm looking for some bullish bounces down at these levels. Now, early morning, we just sort of drifted sideways. We have been sort of sitting at the, let's mark it in, 7292 area for, most of this morning. And then we've dropped down into this zone underneath. Now this zone underneath, I'm also looking at a potential sloping support level on the 30-minute time frame. So we're testing at a support zone and potentially also that sloping support level. So there's a couple of nice confluences coming together, which helped me get into the trade. On top of that, we have got a couple of swing points up here now, which I can sort of look at as a initial target. I don't mean initial target for profit taking, but I can look at it and say, okay, I've got a potential entry candle here. I've got the support zone that I was looking at. I've potentially got sloping support, and I've also got a pretty clean road back up to these swing points. And that's sort of giving me room in the trade. It gives the trade a little bit of room to move around. So I'm looking for a minimum to get up to these levels, but for this trade, I'm looking for, let's have a look, minimum of 10 points, I would say, but I'm really looking for sort of between 10 and 15 points, back up toward these previous highs. Right here. So we'll see how we get on with the trade. Not a lot to do at present. I only got into the trades relatively recently, so the initial part of the trade is when the market's maybe just bouncing around a little bit. You're waiting for the market to show its hand. There's not really a lot that I can go over. I'm looking for it to press higher. At present, we are just sort of squashing down onto this zone. I'm hoping the bulls are going to step in and force the market back up toward at least these previous swings, as I have mentioned. Now, something else I want to go over with this live trade video is sort of relating back to last week's live trade video. I got a comment on that video last week from someone who comments on the videos quite a lot and been a subscriber for quite a while, sort of asking about bringing my stop to break even. And he went over how someone else had told him that they don't suggest you bring your stop to break even. And then he sort of explained the reasons why. So I tried to explain it back to you in the comments, but I want to touch on it on the video and go over it in the video because it's one of the most sort of important things that I learned when I was first coming into trading. So when I first came into trading, I kind of attached myself to traders who already knew what they were doing. Now, that's nothing wrong with that. It's a good idea. I wanted to learn off of people who were already successful at something that I wanted to do. And a couple of things that they told me when I was coming in was that the first one was the main reason that retail traders don't succeed as traders is because they use too small stops. And they suggested to me that I use larger stops. And I'm talking about larger stops, on the 5-minute time frame, maybe 30, 40, 50, 60 points. And then with the actual trades that I'm taking, I'm only looking for maybe 15 points to 10 points of profit. And you sort of just chip away at the market, you don't suffer as many losses, and you're looking to sort of take lots of profits. Now, I followed that advice for a long time. And there was a few other things also that I got told. You know, there's lots of different things when you're learning how to trade. People explain to you what you should be doing. When you're learning how to trade, it's very important to understand that there is no perfect way to trade. Okay, there are multiple different ways to take money from the markets. Now, that doesn't mean that it's easy to do that. What it means is that it's very dangerous to just take someone's explanation or someone's advice as the laws on trading, because people trade different markets. People trade different time frames. People have a different trading psychology. You know, some people I see can handle 40%, 50% drawdowns on their account and then just keep trading and eventually bring it back and get into profit. None of those things are necessarily wrong. If it's making you money long term, it's not wrong. But what's very dangerous is to think that that person is trading in the only way that that is the correct way, or that is the way that you should be trading in, because it might not fit with you. The only thing that's going to tell you how to trade is, you know, there's obviously some solid foundations. You shouldn't be risking your entire account on one trade, I would say. You know, I'm not going to get into this trade and risk the 90% of my trading account, because if it's wrong, I'm going to wipe out my trading account. It doesn't make any sense. You shouldn't be in trades and then it starts to move against you and I decide I'm just going to take my stop out and hopefully the market will eventually come back and I can get out of break even. Obviously, those are fairly solid established rules for trading. You know, they make sense, they're common sense. But when it comes down to you actually executing trades, the only advice you should follow is the advice that you get from your trading results and the things that you learn from your own trading. So with that example of getting your stop to break even, this other person who gave the advice of you shouldn't put your stop to break even, that may work for that person. And if that is, well, obviously it does work for them because that's what they suggest and that's what they do. That's fantastic. That's making that person profitable. But another person, another trader, is going to be trading completely differently. So for example, for me, the reason I bring my stop to break even is through experience. I know that over the period of years, through testing and through tracking lots of different methods, that when my trade gets to a certain level of profit, it's either going to hit my target or it's more than likely going to come down and take me out for a full position loss. So because of that, getting my stop to break even protects me from the full position losses, because the full position losses are more than the market coming back down to my break even and then eventually getting back up to that profit target. So it makes sense. And that's what I'm basing my trading decisions off of. I'm basing it off of what the market is telling me over a long period of time. So you should all be tracking your results. You should all be looking for little tweaks you can make to your trading. I'm always doing it. I never think that I've found the ultimate way to trade, because I know the market will change. I know that I will change. And I know I need to adjust my trading plan to suit. And it could be, multiple different things. It could be your profit target. That was another thing when I first started trading. Everyone, or everywhere I read, every video I watched said you can't be a profitable trader unless you look for 1 to 3 risk to reward on your trades. And I read that everywhere. And I thought, okay, that's correct. So all my trades, I started looking for 1 to 3. And I lost a lot of money because I'd just be in the trade. It would maybe go in my favor. It would then maybe get to a good profit target. Then it would start coming back down once again. And I would just hold it blindly because I'd been told and taught that 1 to 3 risk to reward is what I needed to aim for. But that didn't make sense for me. When I started actually testing how I trade, I found out that I had to look for, or if I did look for a smaller risk reward level, it turned me into a profitable trader because of the way I trade, because of the trades that I pick out, because of the entries that I use to get into the trades. So it's very, very important. That's honestly one of the pieces of advice that I wish I could push out to every single person who is learning to trade. I've got on Twitter, I really don't follow a lot of people on Twitter. Twitter is this really strange sort of area where people follow you and then if you don't follow them back, they unfollow you and stuff. I only follow very few people on Twitter because I think there's a lot of bullshit on Twitter, if I'm being totally honest. Everyone's a perfect trader on Twitter. But there's a couple of guys on there who trade in a completely different way to me. And they seem to be successful at what they do. Now they use huge stops. I believe one of them uses an 1,000 point stop. This is on the FTSE. The other one, I seen recently, he was posting up about using a 500 point stop to get 100 points of profit. Now, if I said to that person when he's first learning, that doesn't work, you shouldn't be doing that. You should be trading like me. He might have tried to learn to trade like me and not become profitable. I can teach the foundations, the fundamentals for them, but then if they find something else that works for them, they need to sort of follow that path. And they seem to make money, they seem to be profitable, because that's what fits their trading psychology, it's what fits their trading plan, and it works for them. And you shouldn't ever come into trading and thinking, because someone on, even what I say, don't just listen to what I say, go and test it for yourself. Find out if it works. If it doesn't work for you, don't trade it. If it's not going to make you money, don't trade it. If it is going to make you money, trade it. That's what trading comes down to. And when you push away all of the nonsense, that's what it comes down to. You're here to learn to take money from the market, and however you take money from the market, fine. It doesn't matter to me how you do it. It doesn't matter to you how I do it. It just matters how we trade ourselves and what works for us. And that's what I was trying to get across in that comment. So if you are watching this video, hopefully that's a little bit of a better explanation. Or maybe it's just a rant, but I strongly suggest if anyone tells you to do anything in trading and they tell you that's the correct way, don't just listen to them. Test your trading and see if it will work for you. I'm testing ways to run profits, ways to use stops, so different sizes of stops, this includes running profits, when to get my stop to break even, what profit target to look for. I'm always testing those things, because maybe over a period of 6 months or a year, I'll see that what I have been doing is starting to maybe lose its edge a little bit. Maybe my stop's a little bit too tight because the market's getting a lot more volatile. Maybe my profit target, if I just extended it to maybe 1 to 2 risks to reward, I would be more profitable overall. But then it comes down to my psychology. For me personally, I prefer to sort of chip away at the market and build the profits up rather than taking lots of losses, but the winners are bigger. And working that way, I find it more difficult to deal with extended periods of drawdown. But that's just me personally. And I found that out through testing and through recording my results and through coming to understand what works for me as a trader. Okay, so back to the whole point of the video, the live trades. For now, we aren't really doing anything. We're kind of holding, finding a little bit of resistance. I didn't really want to see it. I do want to see this market, pressing up to test at these levels at a minimum. I'm fairly happy with the entry at present. We'll see how we get on. I'm not looking to come out of the trade at present. We are just, sort of skimming sideways at 286. But we are testing the sloping support. We are testing that key support level. We have had a huge bearish movement on this market without too much of a retracement. We've got nice clean price action. Yeah, at present I'm happy to stay in this trade. What I'm going to do is, as always, we're at about 13 minutes on the video. I'm going to pause it. If the market starts to move one way or the other, I'll turn it back on and I'll sort of talk you through what I'm looking at. I'll turn it back on if it's coming down to the stop level. If we're starting to press up and we start testing here, I'll turn it back on and I'll talk you through whatever it is I am looking at. Okay, so we have now pressed up and tested at these 2 previous swing points. As we broke up to around about 7.5 points, my stop came up to break even. I am looking for a minimum of really 10 points, but I would like to see around about 12 to 13 if possible. As I mentioned last week also actually, I'm trying to get sort of less screen time. Not when I'm making the live trade video, but in general. So I've had a sort of trade manager developed. This automatically brings my stop to break even. I can also set a profit target. So it means once I'm into a trade, I can get away from the screen. And if you are struggling with the psychology of trading, that can be a huge help. Getting away, not watching the candles moving up and down and wondering what they're going to do and wondering if you're going to have a winning trade or a losing trade. Because it's all about the probabilities of hundreds of trades, not each individual trade. But that's a lot easier to say and understand than it is to actually sort of sit and live through. So looking for the market to press up a little bit more. I should also point out actually from the previous section of this video, I wasn't attacking whoever said bringing your stop to break even is not the correct thing to do. Anyone who's a trader and who is a successful trader, absolutely fantastic. I have the utmost respect for them because I know what they have to go through, or they had to go through to get to profitability and what they have to go through to maintain that profitability. I'm just saying that what someone tells you is correct for them is not necessarily correct for you. Trading isn't 2 + 2 = 4. Trading is 2 + 1 + 1 also equals 4. Trading is 6 - 2 = 4. There's lots of different ways to get to the same result as a trader. And it's all about finding something that suits you and finding something that works for you, not simply what someone else is telling you, because very likely what works for them isn't going to work for you, or it's not going to work for you without a little bit of adaptation. And if you're not willing to look for and implement that adaptation, very likely you're not going to succeed as a trader. You have to sort of figure out how to get your personality into your trading plan so that it works for you. Okay, so we're testing up at these levels. I'm hoping this candle is going to press up. There is the potential for the rejection to come in here and start pressing back down once again. We've pressed up and we've tested out these spikes down here, which are sitting at almost exactly the same level. Potential little area of resistance. We'll see if we can get up to this sort of 11, 12, 13 points. If we can, I will just close it out. But also, if we start to hold at these levels, I may also just lock it in and take the profit. So let's see how we get on. I will let the video run at present. What I may do is just sort of speed it up if it takes a little bit of time. Or if we start to hold here for multiple candles, I'll just pause it and I'll just cut it back down again, because I don't want the video to be too long. It's difficult enough to sit and watch me on a video as it is. I am sure I don't want you to be doing it for 20, 30 minutes. Okay, so the market is just holding at this 10.8 points. We aren't really going anywhere. We've tried to spike up, but we're just holding at this level. If the candle does close like this, I will likely just close it out and take the profit. We'll see if we can get up a little bit further. Okay, so close out the trade for around about £508 of profit. So yeah, really good trade, relatively simple. We got a little bit of sideways price action, but as soon as we came up and tested at this level, we got straight through and we got a nice bullish bounce from this candle also. So a little bit of red here. So this is basically what this expert advisor does when it brings the stop to break even. It puts a little red dash on the screen. Really, really handy if you are struggling with trading psychology. Having something that automatically manages your trades is great. So for next week, I am going to be clambering over pyramids in Egypt. I can't wait. I've always wanted to go to Egypt, but it means I will not be trading. I may attempt to sneak my laptop down to the pool and load up the charts, and I'll see if I can take a live trade throughout the week. I don't know what day. It depends if my girlfriend allows it. If she sees me loading up candlestick charts when we're on holiday, I may turn up drowned in the swimming pool. So we'll see how we get on. Okay, guys. So as always, I hope that was helpful. I hope you're all having a good trading week. I'm James Orr, and thank you.